It's clear 2020 was a year of challenges, adaptation and cost reduction. The pandemic crippling the economy and sending it into a technical recession and making Australians buy toilet paper.
Yeah, we wrote a lot of guides on where to buy things. So, people couldn't find toilet paper. That was the #1 page on Finder for a long period of time. People were trying to buy face masks, so we found places where you could actually source them and purchase them. Hand sanitizer, things like that. It was just a massive boom in traffic, and we helped people find where they could buy those things.
When the stock market bottomed out in March, buy now, pay later company Zip was forced to immediately cut costs.
The uncertainty was, significant, and we were facing the biggest economic challenge, this century. So we took some proactive steps, which was unusual for a growth business such as Zip, where we had to go through a cost-cutting exercise, and regrettably that meant a reduction in workforce. But we felt it prudent to, manage the long-term future of the business and to secure that in the face of growth that might not be coming, where we'd invested ahead of the curve. We certainly took some proactive steps with regard to our risk appetite as well for our consumer acquisition and the management of our portfolio.
Multinational consumer goods company Unilever saw the opportunities for product sales and rejigged its production lines.
This came out like a bolt of lightning after the country had just gone through droughts and bushfires and then, the COVID pandemic. So I think already there had been a need for a lot of adaptability, but we probably had to change in a number of areas, but 3 in particular. The first one was just in continuity of supply, making sure that the products that people needed so badly in home care, personal care, foods and tea could just be provided quickly. So we repurposed some of our lines to produce sanitizer product. We redeployed members of the team from the office into the field to stock shelves. Our frontline workers were our factory teams and our field teams.
At the same time, there were predictions property prices would fall by 20%. But this didn't spook Aussie home loans.
6 months ago, I called that the property market wouldn't flounder as much as the big banks were saying, as much as the economists were saying, and it hasn't. At the end of the day, low interest rates have driven a very stable marketplace. For the average mum and dad out there, it's still cheaper for them to buy, in over 50% of cases, cheaper to buy a property, to get a mortgage, than it is to rent. And that's been driving a lot of this buoyancy in the real estate market throughout the year.
After dipping between April and August, record low interest rates are helping the property market bounce back.
Certainly for all businesses out there, 2020 has been particularly challenging. In fact, it's been one of the hardest years ever, but it's been really rewarding. So whilst we had 1 or 2 particular months around March or April that were challenging, it's been a strong month for our industry. It's been a strong month for real estate, a strong year for real estate, and a strong year for mortgage broking. So all in all, we've seen some record-breaking business months, including last month, which we had our biggest month in our history in terms of home loans.
With Australians being locked down at home for months on end, the household savings ratio increased, assisting retailers. COVID brought a huge boom for online shopping. Did you expect it to grow as fast as it did?
Clearly, in hindsight, arguably COVID has been a tailwind for a business such as Zip. We saw a significant shift in the way Australians spent and shopped, and there was a huge flight to online. There was significant uptick in online marketplace transactions and also purchases for the home. So, some large iconic Australian retailers such as Bunnings and Officeworks arguably were thriving during this period, and Zip has a strong relationship with those platforms.
The pandemic also changing workplace practices, with Zoom and Microsoft Teams meetings becoming commonplace, and some companies capitalised on this transition.
It's given us the chance to pioneer really new ways of working. So actually, as of yesterday, we announced a 4-day-a-week pilot that we're going to be running in our Unilever New Zealand business to let's see if we can unlock all of those processes and blockers in the business that stop us from creating value by giving people the incentive of a day back in their life to do whatever they want. So we'll pay them 100% of their pay to work 80% of the time, as long as they deliver 100% of the output that we expect.
2020 was a year of ups and downs, but these executives believe next year will be one of growth.
I think there'll be some new businesses and new industries that'll start up, like businesses that have quite literally adapted to now what people do, and that's sort of the norm. And I think that will start to actually go through a much bigger majority. So a lot of this online teaching, a lot of online education, I think is going to be massive. I think a lot of, when sports come back, I think in a much more, I guess maybe in a different way, but now we've adapted and a lot more esports are going on. There's a lot more gaming. And so I think people are going to get back into that and going to go to the next level. Esports, I think, will start to now, it was like rising, but it wasn't actually majority, as it's okay to watch esports as much as it is watch. Now it's like, well, you can't watch the sports, so you're going to watch your esports. And I think those kind of things and those trends have been brought forward 5 years.
Zip had record transaction volumes in November and is now eyeing the bricks and mortar space.
I think we have some strategic initiatives around payment acceptance and Tap and Zip, and really, penetrating the offline opportunity in Australia. So largely speaking, buy now, pay later providers have done a pretty good job at penetrating discretionary spend online. We're of the view that there's a significant addressable opportunity for us in everyday spend in bricks and mortar. So we've recently launched the Tap and Zip initiative. We're a direct issuer for Visa, where Zip customers can now tap and pay with their phone anywhere in store. So that's a strong strategic initiative for us to expand on next year.
What are Aussie's goals for next year?
Growth, growth, growth. We've built a great platform, we've built a wonderful brand, we've got more stores opening, we're recruiting more brokers for the demand, and we're just seeing more growth. I mean, the mortgage broking industry now is 60% of all the home loan flows in Australia. So that's a huge opportunity for the industry, number one, let alone the opportunity for Aussie, who runs the biggest retail brand within that, to grow their share as well.
With the economy expanding 3.3% in the September quarter, executives are cautious but optimistic about the year ahead. They say with careful planning and cost management, business should improve. Edward Boyd, Sky News.